Hey everyone, Coach Investor back on our video for today. I hope you all had a great time with your friends and family. For those of you that have celebrated Thanksgiving, and for those of you that are now busy shopping and spending money, look for great deals. Now, this is the first time I'm doing these types of videos. This is sponsored by Seeking Alpha. There is a link down in the description if you want 30% off the premium subscription. And if you want me to do more of these types of content, because I know that on Seeking Alpha you may find a lot of great articles, but you are limited if you do not pay for the service. You are limited to the certain amount of articles you can actually read before it goes behind the paywall. So if you want me to go over different companies, different articles that you find interesting, let me know down in the comments below, because me doing this type of content allows me to be supported and allows the writer to be supported as well. So first time I'm doing this, of course, I had to choose a popular company that a lot of you own its stock, and that's Palantir. Now let's first talk about Palantir, the stock right now, valuation wise. We had a tremendous year, right? We're up 206% year to date, up 34% in the last 3 months. Right now, a market cap of $42.8 billion, with shares trading at just under $20, 19.6. Now, with regards to price to earnings, yes, we are, of course, more expensive today than at the start of the year. We're actually 55.8% more expensive on a forward PE basis. But I mean, you increase the forward PE by 55.6%, yet your stock is up 206% year to date. Now, this is where maybe short-term pain might come in, because maybe the stock has gone high too fast, right? So yes, maybe we will plateau for a couple of weeks, maybe even a couple of months. That's fine. I'll show you later in this video the graph where there might be some negative divergence. We're going to see that at the end of the video. But for the rest, year to date, yes, the mean, we are now more expensive. But if we look, let's say in the last 3 years or so, we are with most metrics under the 3-year mean, and that's because we are becoming more and more profitable as we grow, which is exactly what we wanted to see. And so in this article right here from the value portfolio, Palantir is a log rolling down a hill. Now, he describes Palantir in a pretty easy way. Well, he describes the business model, why he thinks it's going to grow, why he has a buy rating on the stock right now. It's pretty easy to understand, so I'll go over the article. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if not. We really appreciate that. Now, the summary here of the article is pretty simple. Palantir Technologies is a big data analytics company that is performing well with the rise of artificial intelligence. The company had strong quarterly results with its 4th consecutive quarter of GAAP profitability and a 17% year-over-year revenue growth, which of course also means it is eligible for the inclusion in the S&P 500. When that will happen, I don't know. Palantir's opportunity lies in its impressive software and the continued desire for it from major corporations, with the potential for increased profits and valuation. Of course, we also had that announcement that finally the NHS contract has been awarded. I'll do a separate video about that, maybe even invite a couple of speakers to talk about what went right, what went wrong, and why I still remain extremely positive with that move, despite it being maybe right now a bit more underwhelming than what we first thought. So he first starts off with basically a basic description here. Palantir, a big data analytics company, essentially with the rise of artificial intelligence, the company has performed well recently. We think the company is in a great position. AWS revolutionized the compute industry despite its higher cost per unit compute because of how it freed up resources for major companies. With the growth of AI, we expect Palantir to do the same for artificial intelligence and big data. Now, the company had its 4th consecutive quarter of GAAP profitability. Profitability remains low, but for a growing company, it's still impressive. The company's margin of 7% is up substantially year over year. Continued improvement in margins will enable profits to grow faster than revenue that are already growing quickly. That growth in profits will justify investing today. The company's revenue managed to grow very respectable 17% year over year and now annualized at well over $2 billion. Of course, remember at the start of the year, that growth rate was much lower And we were expecting, of course, a year and a half, 2 years ago, that growth will be towards the 25, 30% or so. That was not happening. And so we saw the stock crash quite a lot to the $6 area. Now we're back 17% and improving, and also becoming more and more profitable. So that was supported by incredible strong growth in the company's commercial business, as the company continues to take advantage of the artificial intelligence wave. Growing revenue and growing margin are essential for long-term returns. At the end of the day, the company earned $141 million in adjusted free cash flow, or annualized free cash flow of more than $550 million. The company has a market cap of right now $42 billion, meaning free cash flow yield of more than 1%. That shows the company's financial and cash flow strength. Of course, that's just 1% right now. I do expect that number to increase in the future. Then, Palantir's opportunity. So the opportunity for Palantir is based on organizations continuing to see the benefits to their operations. He gives us here an example with the HCA Healthcare. So the company's opportunity is evident in its growth from being used by 1% of hospital beds across the United States a year ago. Now it is being utilized at 16% of beds across the United States. That growth is substantial. The same type of growth is being seen at the company's commercial partners. The company has an effective multi-stage process. Now, going back to this line right here, the opportunity for Palantir is based on organizations continuing to see the benefits to their operations. This is why boot camps are a very, very effective way of sales. Going from 0 to 5 use cases in record time is much better than just having cold calls, trying to convince someone, oh, this is the software you need. No, invite them, come to the bootcamp, and we'll show you exactly why you need this, how this is helping you, how this is improving your margins, improving your output. This is what you need. And so again, based on organizations continuing to see the benefits to their operations. This is also why I think that the NHS deal, regardless of how much they're getting paid, the NHS deal is a statement. It is, look, the NHS is using our software. These are the results. This is why you should be using us as well. It's a sales tactic. Continues by saying here, first, the company incentivizes and grabs new customer. From that point, the company rapidly grows its scale with the customers. It shows them the opportunity it offers and gains larger and larger contracts. That double whammy of new customers and rapid revenue growth per customer results in much faster overall medical growth. The company grew its revenue 17% year over year, showing the continued desire for its products, and its profit grew even faster, showing that same desire. Then with regards to Palantir financials, for a long time, the company was the preferred partner of governments, and to be fair, it remains so. I mean, having governments is a nice little buffer in case the commercial side doesn't really do well in a certain period. You always have that government side, which in my opinion is always great to have. It continues to offer strong solutions to governments and continues to win massive contracts to help them modernize and improve. While that was exciting to see, that growth for the company was relatively much slower. A trend has come in the past year. Commercial companies are increasingly recognizing the company's potential, supported by the overall movement for artificial intelligence. And so Palantir's opportunity. The opportunity in Palantir is the company's impressive software and the continued desire for that software from major corporations. It enables those corporations to improve their workflows and operations at a much lower cost than what it would traditionally cost them to build software operations and build out those divisions. By the way, this is also why we are having higher valuations these days, higher than what we had 20, 30, 40 years ago. So the people comparing today's valuations of tech companies to companies that were around 30, 40 years ago just doesn't make any sense. You're getting a higher valuation today because you can do things today with much less capital, meaning to create $1, today you might only need, 30 cents, 40 cents. Beforehand, to create $1, you maybe needed 80 cents, 75 cents. So right now, because you only need 30 cents to create $1, you're getting a much higher valuation, and this is across the board. So everybody talking about, S&P 500, is it an historical high valuation, stuff like that? Yes, it is normal, because now we can produce a lot of things at a much lower cost. Just remember that. And with regards to Palantir specifically, at the same time as revenue grows, Palantir's margins will increase. That's because the fixed cost will be increasingly spread outwards. That enables profits to increase even faster, which eventually justifies the company's valuation. That opportunity versus Palantir's current valuation is immense. In the meantime, the company has a strong cash position to support operations and basically no debt as well. The risk is pretty simple. So the largest risk to the thesis is the converse, that the trend changes and companies simply don't see sufficient opportunity in the company's software offerings. Given the company's lofty valuation that its current profits don't justify, that could lead to the rapid poor returns in the share price, making the company a poor investment. This was basically a big bear thesis at the start of the year, especially last year as well, when basically sales wasn't where it was supposed to be. Remember, Alex Karp said himself, he's not going to send out people that suck at sales, that can't really explain the product in a good way to customers. There's no point in doing that. You have to train those salespeople because, we've talked about that with Tesla, for example, right? That first ad we saw there on YouTube, this looked like an ad that an engineer would make. No, you need an ad that a marketing expert would make. The same thing here. You cannot go out and give, a regular salesperson, oh, this is Palantir, go try and sell it. No, it needs to be an expert in the software to be able to sell it to other corporations, to convince them that this is the software that they need. And so, yes, the thesis risk here is that they're unable to convince other companies, unable to show them the results, that this is the software they need and that they shouldn't go to any other competitor out there. Currently, they're doing a great job with bootcamps. I'll repeat it again and again in every video. I think bootcamps was a genius idea. And so to conclude, Palantir Technology is a log rolling down a hill. The pace is picking up, the company continues to see strong growth in its government business, but now thanks to artificial intelligence, the company's commercial segment is picking up even quicker. In our view, the company offers the customers what AWS did for computing. The company's revenue is growing and its profits are growing even faster. That helps to make the company a valuable investment as its profits continue to grow, justifying its valuation. Let us know your thoughts in the comments below. If you have a Seeking Alpha account, do go and follow the value portfolio. I'll just click here myself. He has 32,000 followers there. A pretty good writer. They themselves hold shares of Palantir. That's always nice to see. Again, Palantir is a long-term holding. You're not going to buy the company right now in the hopes that it goes to $30, $40, $50, $100, I don't know, tomorrow, next month, next quarter, next year. That's just not going to happen. You certainly do not want to have the same thing we had back in 2021, where the company had no business being close to $30. Just the fundamentals did not support that. And now looking at the stock today, like I said at the start of this video, this is usually not such a great thing where the stock goes higher, but you see here the indicator go low. In this case, this is the RSI. The RSI is lower, so there is a bit of weakness right now with buying, which is why we could see the stock drop back, maybe visit the 20 or the 50-day moving average. I wouldn't even mind it going back to the 200-day moving average. By then, maybe it's going to be around $15 or so, which is not that far from that support line right here. I know a lot of people will be like, oh no, it makes no sense. Why should it go there? Well, I've seen a lot of people say, oh, I'll only add, I hope Palantir goes down. I hope Palantir goes down, or with other stocks as well. Well, embrace those opportunities. Embrace the dips when it is backed with good valuation. Stock acts irrationally. That's usually the best time to buy. You do not want to buy the stock when it goes up for no reason other than just FOMO. That's just my thought. Of course, do share your thoughts down in the comments below. Again, if you would like to take advantage from the Black Friday sales, link is down in the description, 30% off. You can read as many articles as you want. If you have another company you want me to cover, another article where it's behind the paywall right now, you want me to cover on the channel, let me know down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye-bye.